Welcome to our payroll tax talk today to discuss President Trump's executive memo in regard to the employee Social Security deferral. I am Vicki Stolnaker, Director of Operations for Payroll Systems, a division of JRBT.
And I am Julie Mosley, a supervisor in our Client Accounting Services Department here at JRBT. Just a reminder that our presentation is for informational purposes only, and accordingly, you should consult your attorney, HR professional, or tax advisor. So, Vicki, can you provide everyone with a little bit of background on the presidential memo?
In early August, President Trump signed an executive memo that was requesting that the Department of Treasury defer the employee Social Security tax from September 1st through December 31st of 2020. In addition, he recommended that the Department of Treasury and Congress work to make it a forgiveness of tax as well.
Has there been any guidance released by the Secretary of Treasury regarding this deferral?
Yes, on August 28th, they did release a notice in regards to how to implement the memo. However, it did not address all the questions that employers and payroll processors needed in order to fully implement it. It did provide information to confirm that the deferral dates for the employee Social Security tax was from September 1st through December 31st, and that the payback period would be from January 1st through April 30th of 2021. However, we have not received anything in regards to a forgiveness of tax yet because Congress has not passed any legislation.
So one of those questions from employers that we're getting is what employees are eligible for this type of deferral?
For employees to be eligible, they have to make less than $4,000 on a biweekly basis. And it is also determined paycheck to paycheck. So if on one paycheck an employee makes less than $4,000, so they are eligible for the deferral. If on the next paycheck they make more than $4,000, then they're not eligible. So we have to look at every single paycheck, every single pay period to determine whether or not employees can defer that tax. As well, if the employer pays on a different frequency than biweekly, for example, if they pay weekly, then the limit has to be adjusted accordingly. So on a weekly basis, it would be on earnings less than $2,000.
Okay, so many employers are also asking, is this a mandatory deferral?
In the notice released by IRS at the end of August, they did not state specifically if it was mandatory. However, upon review of the memo issued by the President, as well as verbal interviews with various individuals of the Department of Treasury, they have stated that it is to the employer's discretion, which means that it is not mandatory, they get to choose. And that's important because there is some liability and risk to the employer if they decide to implement it.
So if an employer chooses to implement this tax deferral, what type of risks are we talking about?
If the employer is unable to collect it back from the employee during the payback period, so you either have an employee who doesn't make the same amount of money in January through April of next year, or if the employee terminates employment with that employer, the employer has to collect it back. If they're not able to collect it back, then the employer has to pay the tax. So it comes out of the employer's pockets at that point.
What are some ways that an employer might be able to collect that tax back from the employee?
If the employee is still employed, then they can just collect it back from their paychecks from January through April of next year. If the employee terminates employment, then they can either request it back from the employee, they can take it out of their last paycheck that they pay them if there's enough funds available, or the employer can pay the tax on behalf of the employee. And also we could potentially gross up those taxes as well. And those last two items end up being additional taxable wages to the employee.
Okay, so is there any additional information that employers would need to know if they would like to opt in and do this deferral?
The key to everything with this is communication. So if the employer decides to offer this to the employees, they need to communicate with their employees in regards to this is just a deferral. So for September through December of this year, the employees will get larger paychecks because they won't have Social Security tax coming out. Okay. However, starting in January through April of next year, that deferred amount is taken out of their checks again. It's taken out at that point. So the employees end up with double taxation, basically, of Social Security tax next year. So they get a benefit now of a higher paycheck, but then in 2021, they're going to have a lower paycheck for those first 4 months. And once again, if the employee cannot pay it back to the employer, then the employer has to still remit that tax back to IRS January through April of next year. And they need to communicate with the employees, let them know, that this is what will happen whenever we do the deferral.
And so on the other side of that, what would employers need to know if they choose to opt out and not do this deferral?
If they choose to opt out, they just continue to withhold Social Security tax the same way that they always have. There's no deferral for the employee. The employer just remits the tax whenever it's deducted from the paychecks. But they need to communicate with the employees and let them know that it's recommended that they do, that they're not going to do the deferral, and then maybe let them know the reasons why. It's just there's a lot of liability on the employer to collect it back, and also a lot of shock to the employees whenever their paychecks for January through April of next year are a lot less.
Well, there seems to be a lot of logistics going on with this whole deferral. What kind of effect does this have on payroll processing?
With payroll processing, this is a very complex memo. And so it's requiring quite a bit of software programming across all the payroll processors, because we have to keep track of the employee deferral on an employee by employee basis, as well as keep track of how they're paying it back, whether they're paying it back whenever they terminate employment or if they're paying it back on January through April of next year. In addition, on the employer side, you have to keep track of that grand total of the deferral, and then also keep track of all the payments to make sure everything's paid back by April of next year.
Do we know if there's going to be any software available for this deferral, or when software might be available to show the changes in these?
Yes, with the complexity of it, the software programmers are currently working on it. They've been working on it ever since the president issued the memo and then the additional guidance from IRS at the end of August. But they're estimating it to take at least 3 weeks to complete that programming. And so if an employer wants to implement this, we may have a software limitation that won't let it occur until either the end of September or the beginning of October.
So we had a lot of major changes to the 941 during second quarter, as I think most everybody noticed. So are we expecting any changes for third and fourth quarter?
There will be minor changes to the 941, nothing compared to what we had for second quarter. It's just basically 2 lines will be changing. One of the lines that dealt with just the employer's deferral of Social Security tax under the CARES Act, that's now going to be lumped together with the employee deferral. And then there'll be an additional line that will talk about, that will provide the detail just what's liable for the employee deferral for next year.
Great. Well, thank you, Vicki, so much for all the information. Be sure to stay up to date with our websites at jrbt.com or at payrollsystemsjrbt.com, and make sure you sign up for our newsletters to stay up to date with all of the new information. Thank you.